Bridgetown. It is now in an interesting situation and should probably pique our interest. It's backed up by some very experienced and influential people in the industry. It aims at a region where the growth seems to be the strongest in the world, and using a vehicle that came at the right moment. But right now, Bridgetown has lost virtually all its premiums in the market. As a SPAC, its stock price is nearing the bottom of $10. Why is that the case? Why is the SPAC being sold by its shareholders? That is the question that we will try to answer in this video. Also, if you're currently holding Bridgetown and wondering if you should cut your losses, or if you're a trader looking to buy the dip, then this video is for you as well. Please keep watching this video until the end because we're going to talk about what are the important factors to consider. Bridgetown is a special acquisition company set up by Peter Thiel and Richard Lee. Peter Thiel is known as the VC behind Palantir and PayPal. Richard Lee is one of the most influential businessmen in Asia. The company is set up so that Bridgetown can find potential startups to reverse merge with, so that they can be listed on the US stock exchanges, and to raise capital in the deepest capital pool in the world. In the case of Bridgetown, the SPAC wants to find online-based startups with high growth potentials to merge with in Southeast and Pacific Asia. In 2020, the company was rumored to be in negotiations with Indonesian startup Tokopedia. However, that transaction never went through, and Tokopedia decided to go ahead with another company instead. I have covered this company before, and my conclusion at the time was that the company is going through a tough market phase. So, for people who are not familiar with what a SPAC is and why they are so popular, a SPAC is a special acquisition company. It's a blank check that is listed on stock exchanges so that private companies can use them to go public without the expense and complex procedure of an IPO. The reason why Bridgetown was very popular back in 2020 was because at that time, the company was rumored to merge with the Indonesian startup. The fact that it's backed up by two very experienced and respected individuals in the industry definitely helped as well. The charm of SPAC shares is that you can theoretically get your investment back up to $10 a share or sometimes $20 a share depending on the company's own policy, because they would correspond to the original share price that the company would sell these shares for. In other words, the main advantage of a SPAC is that if you can get it at $10, you're almost guaranteed to make money. Now, be careful. It doesn't mean that your investment will necessarily blossom and go through the roof, like so many SPACs did throughout 2020 and 2021. There have been occasions before where the stock price falls below $10 after a merger is confirmed. This is because the guarantee of getting the initial $10 back no longer applies as soon as the SPAC has finalized the merger. An example of this is Hyliion, which recently fell below $8. The recent momentum of SPAC stocks has been lackluster, to say the least, with many of them wiping out their premiums that investors were willing to pay for the shares at one point. If we must find a reason for this general debacle, I would say the two obvious causes are overall market sell-off since approximately February and March, and the cold shower investors received after the CCIV merger was confirmed. But if we look beyond those aspects that justify the current sloppy stock performance, this is where the opportunity can be found for those who are willing to take the risk. At this moment, the stock of Bridgetown is near its bare bone price of $10. Theoretically, if you buy in at this price, there is no possibility to lose money as long as they don't confirm a merger target. Because like we said before, the amount will be returned to you at the end of the limited period of time if the SPAC didn't find any merger target. The only exception to this scenario is the stock going lower after the merger is confirmed. In that case, there won't be the protection shield for your investment. So there are two approaches. The first one is to speculate on the short term, because you don't want to put any or too many eggs in the basket of long-term development of startups in Asia. In that case, the strategy would be to buy the shares now and to wait for the announcement of merger to be released to the public. Here is a very important detail. You have to sell the shares before the merger is confirmed. You may be missing some future profits, but at least you would be securing the profit from the hype without carrying the potential risk of any scandal or modifications required by investors that may damage the stock's momentum in future. A good example that justifies this approach is that ARK recently sold their participation in a SPAC, even if the price was below $10. It is believed that the reason why ARK did this was that the merger target was already announced. The SPAC had no interest backing down, and they were worried that the stock may not perform well in the current market environment. At the moment, Btwn is in talks with another Indonesian startup for merger. Now would be a good time to enter in a position and wait for a possible announcement. The second perspective is a bullish overview, if you believe in online-based startups and believe that they can grow in the years to come to something much bigger. In that case, you should also buy the shares of Btwn now and wait for the company to grow. The second approach obviously requires far more tolerance to uncertainty and risk, as well as more faith put into growth potential of those companies in that region of the world. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.